Bitcoin's down 2% today. But notice that it is actually following this red Japanese liquidity line. Now, you may be wondering, Juan, if Bitcoin is following this line or has been following this line all along, how come you didn't tell us? Now, if you read the written issue, which I hope you do before you watch these videos, I always recommend that. On February 18 or 19, I brought this up. I brought up the fact that we actually have two competing liquidity pictures now. And I don't know if I made the point clear on the written issue, but what I wanted to say is red and blue guys, they're usually always correlated. You can see that it's pretty much the same line when you scroll back up. You're pretty much looking at the same thing, which means I wasn't really forced until now, or we weren't forced until now, to pick a liquidity line. We could use central bank liquidity, or we could use Japanese M2 interchangeably. They're literally the same thing. Mostly because these are dominated by the exchange rate of the dollar. So the dollar value against other currencies. So the Dixie, strong correlation to the Dixie in these liquidity metrics. The thing is, Japanese liquidity only looks at the yen exchange rate. Now, the yen usually trades alongside all the other G7 or major currencies in the world or major currency baskets. Now it's not. They're deviating significantly. Japanese, I don't know if you follow what's happening in Japan, but they're in a heap of trouble, mostly because they have too much debt. So flash news, the same is about to happen to the United States, Europe, and all the other developed world nations. They have too much debt. So Japan is grappling with this deflationary abyss, which has made the currency weaken. As the currency weakens, Japanese liquidity has also been very, very weak. And so basically what you're seeing here is dollar strength versus Japanese yen. And this is hurting Bitcoin. Now, this is one view. We can see that it's trading one-to-one in one-to-one correlation with, it's actually -1 correlation with the price of oil in the stock market, but it's also following this liquidity line quite remarkably. And again, going back to that question, why didn't you follow this Japanese liquidity line? To be honest, guys, because we have three other indicators, three other macro indicators. You can see them here. T-bill supply. Actually, I need to double click on this. We have T-bill supply, which is a remarkable predictive power to the price of Bitcoin. We have the 10-year rate inverted, also remarkable predicting power to Bitcoin, and central bank liquidity. All of these lines also work. So we have, or I have 4 macro models, and only one of them, that was the odd one out. Japanese liquidity was the odd one out, saying, actually, hold on, we may not get such a strong rally in February. Notice that all models agreed, and this is what I said on February 18, all models agree that February is the low. And so far, February was the low. We haven't even gotten close to the February lows at 60K, 59K. So we haven't gotten close to that. So macro worked. It did pinpoint the low. But the only macro indicator that actually showed us what Bitcoin would do going forward was Japanese liquidity. Now, going back to the same thing, answering the question that I'm asking myself is, why didn't I warn of this before? Well, honestly, if I zoom in here, notice that it was very difficult to see which one Bitcoin was following. So after I wrote that report on February 18, I said to myself, you know what? I'm not going to keep talking about this because it's going to be too confusing. So I'll shut up about Japanese liquidity until I have enough information to confirm that we are indeed following. Now, zooming in here, you can clearly see that we're following liquidity, Japanese liquidity, that is, but only as of the last few weeks. So let me show you this. If all you can see is Bitcoin going up to this high here, which I believe was March 16, right here, March 16, it was trading at 75K. It actually looked like it was following, it wasn't clear, but it looked like it was following central bank liquidity, the blue line, a little more closely. Now, it was lagging liquidity because in mid-March, we should have been trading at 80K or so, but we were kind of close. We were trading at 75K. I think Bitcoin topped out at 76K. So it wasn't clear yet. On the written issue, on the issue on February 18, I said, well, March 10 is when central bank liquidity and Japanese liquidity diverge. And this is true. It's this high here. This is when the liquidity lines diverge. But actually, Bitcoin continued to rally into March 16. This is fine. There is about a 2-week margin of error on these liquidity metrics. I'm going to get to that in a second, what that means in a moment here. So up until the second half of March, wasn't really clear which one we were following. And then I couldn't actually shoot you a video last week, but last week on the sell-off that we had a couple of weeks ago, actually, it started to look more like we were following Japanese liquidity. Now, cyclically speaking, let me zoom out of here for a moment. Cyclically speaking, and let's get rid of some of these lines. There's too many drawings already. Cyclically speaking, what Japanese liquidity is telling us, or was telling us, still is that we're going to get a neutral 80-day cycle. A neutral 80-day cycle is basically a cycle that starts and ends about the same price point. And this is what Japanese liquidity was telling us.